Most of us know the names Warren Buffett, Charlie Munger, Howard Marks, Mohnish Pabrai. But there's one thing almost no one notices. The greatest investors in the world, no matter their nationality, background, or strategy, all share one surprisingly strange common denominator. The richer they become, the simpler they are. The more successful they become, the more humble they grow. The more money they possess, the less money controls them. It's not because they're superhuman. It's because they understand something most people never realize. Real wealth doesn't come from being smarter. It comes from seeing the world differently. When William Green spent more than 2 decades sitting across from these extraordinary investment minds, he found that he wasn't just learning about finance. It felt as if he was seeing life through a completely different pair of eyes. The eyes of people who don't race, yet always finish first. Don't try to win fast, yet always win long-term. Don't accumulate possessions, but accumulate wisdom, peace, and freedom. And richer, wiser, happier is the map that leads into that world. If you've ever wondered, what's really going on inside the minds of people who are richer, wiser, and happier than almost everyone else? Then keep watching, because we're about to step right into that world. Part 1. Paradoxical thinking, the source of all investment wisdom. There's an interesting insight William Green discovered after hundreds of hours talking with the greatest investors on the planet. They don't think like the rest of the world, not because they're trying to be different. They have to think differently, because if they thought like the crowd, they would have been swept away by the crowd long ago. Green calls this paradoxical thinking, the first foundational trait that separates extraordinary investors from everyone else. The first paradox: when everyone acts, they stay still. Americans are familiar with this scene. Whenever the market plunges, CNBC or Fox Business flashes bright red warnings like the world is ending. Commentators get dramatic, and retail investors rush to dump their 401ks. Meanwhile, elite investors become calmer. Bill Miller once said something that sounds completely insane to most Americans. When the market panics, that's not the time to run. That's the time to think more clearly than ever. That's paradoxical thinking. When the crowd is afraid, they pause. When the crowd panics, they breathe deeper. When the crowd chases trends, they ask, "Why should I follow?" It sounds simple, but in reality, it requires a mind trained to resist every primitive instinct you have. The second paradox: they don't try to be smarter, they try to make fewer mistakes. Most Americans want to win big. Find the next 10x stock, jump into the AI trend, buy crypto the moment Elon Musk tweets. But the investors Green interviewed aren't obsessed with high returns. They're obsessed with avoiding stupidity. Charlie Munger is the perfect example. He spent his entire career building a system to avoid stupidity instead of a system to look smart. In the book, Green explains that this paradoxical mindset is what keeps them alive across decades, while many smart but greedy investors get blown up by one fatal mistake. That's why Warren Buffett's most famous quote is burned into every American investor's memory. Rule number 1, never lose money. Rule number 2, never forget rule number 1. They don't win through explosions of brilliance. They win by avoiding the deep holes everyone else falls into. The third paradox: success comes from simplicity, not complexity. Go into a Best Buy in the US and you'll see hundreds of TVs, iPads, laptops, soundbars. Americans love the idea that more equals better. But in investing, the greatest minds go the opposite direction, toward simplicity. John Templeton, the legendary investor who bought 100 dirt-cheap stocks during World War II, said that what made him successful wasn't extraordinary analysis, but a brutally simple strategy. Green emphasizes this point. Great investors don't try to know everything. They try to understand a few things with absolute clarity. While most Americans are busy flipping stocks on Robinhood or tracking every CEO tweet, elite investors stick to one deeply understood philosophy. Another paradox: know fewer things but think deeper. Act less often, but act more effectively. the final paradox. To become rich, you must learn to let go. Green repeatedly highlights a psychological truth. Humans are wired to want more. More returns, more information, more assets, more action. But great investors let go of many things. They let go of the need to win every argument. They let go of the fantasy of getting rich fast. They let go of the excitement of catching the newest trend. They let go of the FOMO that grips all of America. Howard Marks says, if you want different results, you must be willing to live with the loneliness of independent thinking. It's not a painful kind of loneliness. It's intellectual independence, the foundation of investment wisdom. If you want to be wealthy and wise, like the great investors, you must learn to think against your instincts. You can't beat the market by thinking like Robin Hood's marketing team, like Twitter, like CNBC, or like a panicking crowd. You win only by stepping into the world where elite investors live, a world of paradox, where silence beats noise, simplicity beats complexity, and calmness beats chaos.
Part 2. The Power of Simplicity. There's one thing that constantly surprised William Green when he spent time with the world's greatest investors. They don't live in the same complicated universe as the rest of Wall Street. While millions of Americans drown in a whirlpool of news updates, interest rate forecasts, CPI numbers, oil prices, gold prices, and endless quantitative models, the true masters of investing choose to sit down, take a deep breath, and push 90% of that noise aside. The difference is simple. They understand something most people don't. Simplicity doesn't make you weaker. It helps you see more clearly. Green noticed that nearly every investor he interviewed shared a remarkable trait. They deliberately simplify their strategy, their process, and their information flow to the point where it often looks like they're doing too little. But in reality, they're doing something most people aren't patient enough to do. They focus. Imagine standing at a Costco on a weekend. It's loud, crowded, packed with signs, samples, promotions, and your brain is being pulled in 20 different directions. That's the mental state of most retail investors. Always distracted, always chasing the latest update, always believing that knowing more will help them earn more. But people like Jack Bogle, Warren Buffett, and Charlie Munger live by the exact opposite philosophy. The more random things you know, the harder it is to get rich. Understand a few core principles deeply, and that's when you find peace and long-term success. Green emphasizes that simplicity isn't naive or uninformed. It's a form of intellectual discipline, a deliberate choice to keep your vision from being clouded by noise. Charlie Munger famously said that his secret to success was simply to sit on my ass, do nothing stupid, and wait for big opportunities. It sounds like advice for a quiet retirement in Florida, but behind it lies an entire philosophy. Investing isn't a game of complexity. It's a game of patience and clarity. Real-world evidence in the U.S. proves this so clearly, it's almost obvious. Millions of people trade stocks on Robinhood convinced they can win fast, but data shows most of them lose money over long periods. Meanwhile, those who simply hold the S&P 500 for 10, 20, 30 years, the people who act the least, end up with the best results. Why? Because simplicity gives you three things complexity never can: clarity, discipline, and peace of mind. When you're not distracted by dozens of strategies, you can follow one path to the end. When you're not obsessed with daily price movements, you avoid impulsive decisions. When you're not chasing news, analysis, or contradictory opinions, your mind becomes quiet enough to make truly wise choices. Green shares that many of these investors love simplicity so much they don't watch the news, don't check stock prices daily, and don't care whether the market is up or down in the short term. To them, the market isn't a morning headline. It's a wealth machine that works across decades. That is the power of simplicity. It frees you from the illusion of control, from the pressure to act constantly, from the fear of missing out. It helps you live slower, think deeper, and invest smarter. In the world of investing, just like in life, simplicity isn't a weakness. It's the solid foundation on which all true wisdom is built.
Part 3. Mastering your emotions. The skill 99% of people lose. William Green once said, "In investing, you're not fighting the market, you're fighting yourself." It sounds philosophical, but it's actually the most brutally honest truth that most investors, and even everyday people dealing with money, constantly forget. Because when it comes to money, we don't operate on logic, we operate on emotion. And emotion has destroyed more wealth than every financial crisis combined. Green realized this when interviewing legendary investors like Howard Marks, Mohnish Pabrai, and Sir John Templeton. The best investors don't have superhuman intelligence. They have superhuman emotional control. They don't let fear drag them into panic selling. They don't let greed lure them into bubbles. They don't let impulses break their discipline. Meanwhile, most of us, ordinary Americans dealing with student loans, credit card debt, inflation, and a constantly shifting market, get pulled around by our emotions every single day. We buy because friends brag about profits. We sell because CNBC flashes negative headlines. We invest because we're afraid of missing out. And weeks later, we regret everything. It's not your fault. This is how the human brain is wired, to react fast to threats, chase immediate pleasure, and avoid pain at all costs. But the financial markets run on the opposite logic. Success requires a cold head, firm discipline, and the ability to tolerate short-term pain for long-term rewards. Green gives a simple, everyday example. Imagine driving on Interstate 405 during rush hour in Los Angeles. The lane next to you seems faster, so you switch immediately. Minutes later, your old lane speeds up and you feel tricked. That restless frustration is your brain reacting to uncertainty. And it's the same reaction that pushes you into terrible investment decisions. Emotions make us switch lanes, switch strategies, and break every plan we carefully designed for ourselves. But the great investors in Green's research understand a powerful truth. Winners aren't the best predictors. They're the least affected by emotion. They build systems that minimize emotional interference. Automatic investing, long-term holding, avoiding what they don't understand, and essentially locking themselves away from impulsive decisions. One real example from recent American history tells the whole story. In 2020, during the pandemic, the U.S. stock market collapsed. Millions panicked, sold everything, withdrew their 401ks, and closed their investment accounts. But just a year later, the market surged into one of the strongest bull runs in history. The winners were the ones who did nothing, the ones who controlled their emotions. Not because they were smarter, because they were calmer. Green wants readers to understand that emotional control is not a gift, it's a discipline, a practiced skill. Thinking slowly, observing yourself, recognizing fear, accepting uncertainty, and refusing to let moods dictate your actions. His deepest conclusion is this: the truly wealthy aren't the ones who earn the most. They're the ones who control themselves the best. In a world where everything is designed to provoke your emotions, housing prices, stock charts, social media, the ability to stay grounded is a genuine superpower. And once you begin developing that power, you don't just become a better investor. You become a calmer, wiser, and happier human being.
Part 4. Humility, the pinnacle of financial intelligence. After interviewing dozens of the world's greatest investors, William Green realized a paradoxical but universal truth. The smartest people in finance are also the most humble. Not the polite, superficial kind of humility, but the kind that comes from deeply understanding that the market, life, and the future are all far bigger than the ego of any individual. Green recalls that when he met Charlie Munger for the first time, he didn't see a confident Wall Street legend. Instead, he saw a 90-year-old man who was slow, blunt, somewhat austere, someone who never believed he was certain about anything. Munger once said, "I just want to know where I'm dumb so I can avoid repeating it." Here was a man widely regarded as a symbol of financial wisdom, yet the phrase he repeated most often was, "I may be wrong." This mindset is the complete opposite of how most of us think. We often try to prove we're right, even when our wallet is clearly proving otherwise. Green writes that financial humility begins with accepting 3 uncomfortable truths. You can't predict the future, you can't control the market, and, the painful one, you're not as smart as you think you are. But here's what matters. That acceptance is what opens the door to wisdom. Green gives many examples of how people try to beat the market, chase hot stocks, or believe they have discovered some secret opportunity everyone else missed. And before long, they learn a harsh lesson. The market doesn't reward overconfidence, it punishes it. A 2022 U.S. survey found that more than 70% of retail investors believe they could outperform the S&P 500 by trading on their own. But real data shows most underperform the market simply because they overestimate their ability and underestimate how difficult this game really is. The great investors Green spoke with, from Howard Marks to Jack Bogle, fully understand and accept this brutal reality. That's why they built strategies rooted in humility, diversifying, investing for the long term, avoiding excessive intervention, buying only what they understand, and always planning for mistakes. Humility also gives people a priceless advantage that the overconfident never receive. It makes you learn faster. When you admit you don't know everything, you start observing more, asking better questions, and avoiding the traps of arrogance, the very thing Green calls the investor's poison. But humility isn't just a financial strategy, it's a way of living. A humble person knows that wealth says nothing about their intrinsic worth. A humble person understands that every success involves an element of luck. A humble person doesn't let ego drive decisions that determine their future. And above all, a humble person always keeps the door open to learning. Green writes that on the journey toward wiser wealth, most people fail not because they lack information, but because they refuse to acknowledge their own limits. Meanwhile, the real winners almost always share one trait. They willingly underestimate themselves in the short term so they can become better in the long term. Once you understand this, you begin to approach money with a lighter, clearer mind. You're no longer driven by the ego's desire to be right now, but by the commitment to be right for a long time. And that is the essence of richer, wiser, happier. To become truly wealthy, you must learn to bow to reality, not surrender to your own emotions.
Part 5. Long-term thinking, the weapon the crowd will never possess. In his journey to understand the minds of the world's greatest investors, William Green uncovered a simple yet powerful truth. Every investing genius sees farther than the rest of humanity. Green writes that if Buffett, Munger, Marx, Templeton, and Pabrai share one superpower, it isn't the ability to predict the market. It's the ability to ignore noise, endure loneliness, and stick with the right decision for an extraordinarily long time. Long-term thinking sounds obvious, but it's something most modern people simply cannot do. In America today, everything is engineered for instant results. News updates by the minute. Trading apps ping price alerts every second. Social media turns every tiny fluctuation into a breaking story. In an environment like this, Green argues that long-term thinking isn't just difficult, it's deeply countercultural.
You must be willing to look stupid in the eyes of others for years before eventually becoming the only winner that matters. He shares the story of Nick Sleep, a low-profile investor with returns so extraordinary that many professionals refuse to believe them. Sleep followed a radically simple belief: invest only in exceptional businesses and hold them for as long as possible. He invested in Amazon when Jeff Bezos was still mocked on Wall Street, during years when the stock fell by 50 to 90% multiple times. And Sleep simply sat there and waited. Not for 2 weeks, not for 2 months, but for 2 decades. When asked how he endured such insane market periods, Sleep gave a response that Green never forgot. Good things come to those who are willing to wait while everyone else fights with time. This, Green says, is the essence of long-term thinking. Average people are pulled around by present emotions. Exceptional investors live in the future they are building toward. Buffett famously said that the market is a machine that transfers money from the impatient to the patient. But Green pushes the idea even further. Patience isn't just a financial strategy, it's a form of intelligence. Because to be patient, you must deeply understand the nature of value. To be patient, you must train yourself to overcome fear and restlessness. And to be patient, you must have the courage to live differently from the crowd. Green says long-term thinking is like planting a tree. Year 1, nothing happens. Year 3, still barely noticeable. Year 10, its shade covers an entire garden. But most people today, especially in America, don't have the patience to plant a tree. They want to buy a fully grown one, put it in the ground, and have shade tomorrow. And that, Green argues, is exactly why 95% of investors lose money or underperform the market. Long-term thinking is the passport that takes you out of the chaotic world of the crowd where everyone chases everyone else, and into the quiet realm of the true winners. It's a weapon the crowd will never possess, not because it's complicated, but because it goes against the very nature of human impatience. And if you truly understand, live by, and invest with this mindset, you won't just become wealthier, you'll become calmer, wiser, and far freer than anyone trying to get rich fast.
Part 6. Optimizing life. Wealth isn't about having more, but needing less. William Green says one of the biggest turning points in his understanding came when he realized this: the wealthiest and happiest people he had ever met weren't chasing more. They were optimizing their lives to need less. This isn't minimalism in the throw away your stuff sense. It goes much deeper than that. It's the process of freeing yourself from desires that drain your energy, distract your mind, and quietly make you poorer. When Green interviewed John Templeton, one of the greatest investors of the 20th century, he discovered that Templeton lived by an unbreakable rule. If something doesn't bring more value than the amount of mental energy and time it consumes, I eliminate it. Templeton cut spending not to save money, but to save mental bandwidth. He understood that every new purchase becomes a new concern. Every new responsibility takes away a piece of your freedom. Charlie Munger put it even more bluntly: a good life is a life with very few stupid things in it. Fewer arguments, less debt, less need to show off, fewer toxic relationships, fewer things that make you wake up feeling heavy. That's why Green calls the mindset of optimizing to need little a quiet key to lasting wealth. Wealth isn't about what you buy, it's about what you no longer crave. When you reduce the number of things you want, you increase the number of things you have. Because real wealth isn't measured by how many dollars are in your bank account,
but by how many desires no longer control you. The poor, according to Green, aren't the people with little money, but the people with too many wants. They're always running to catch up, running to fill emotional gaps with new purchases, running to prove something to someone. Meanwhile, the great investors Green met radiate a rare calm. They're not loud, not flashy, not competing with anyone. They optimize their lives the way they optimize a portfolio. Eliminate the non-essential, keep the core, focus on what truly matters. And here's the greatest paradox. The less you need, the more you actually have. You gain more time to think deeply, more calm when the markets swing, more freedom to say no to things that don't fit your life, more clarity to make the right decisions. That's why Warren Buffett lives like an ordinary man. An old house, a modest car, a life free of unnecessary complexity. It's not that he couldn't buy more. It's that he understands. When your needs are low, your risk of making bad decisions is low, and your freedom is at its highest. Happiness is a subtraction problem, not an addition one. Green wrote a line that made many readers stop and think. The fastest way to become rich is to reduce the number of things that make you feel deprived. The simpler you make your life, the faster you move toward financial success. Spend less, worry less, reduce pressure to win fast, make fewer impulsive decisions, and eventually you give your money the time it needs to grow. Most Americans fall into the opposite trap. Earn 10, spend 12. Earn 20, spend 25. And then work themselves to exhaustion to maintain things they never truly needed. But the people Green learned from understand something deeper. Real wealth doesn't come from chasing more. It comes from optimizing your life so you become freer every single day. Not rich because you have a lot, but because you need so little.
Part 7. Building freedom. Money is a tool for buying back time. William Green once shared that after spending hundreds of hours talking to the world's most remarkable investors, he discovered one trait that set them apart from the rest of humanity. They don't invest to become rich. They invest to buy back time. It's a quiet kind of freedom, but powerful enough to shape an entire life. When Green asked Howard Marks, the legendary asset manager, why he pursued investing for decades, Marks didn't mention money, luxury cars, or influence. He spoke of a single gift this career had given him. I have the ability to control most of how I use my time. And Green realized, when you use money to expand your freedom of choice, money becomes a good tool. When you use your time to chase money, money becomes the most subtle prison. Time, the only asset that can't be replenished. One American investor once confessed to Green that he had chased an enormous income, only to realize he had been trading away the hours of his life for meetings he couldn't even remember. He said, "It took me 10 years to get rich, and then another 5 years to get poor enough to have time to live." That is the tragedy of countless people, including the American middle class. The more they earn, the more time they sell. The more they can buy, the less freedom they have. Meanwhile, the investors Green studied lived completely differently. They earn money so they have the right not to do what they don't want to do, to spend weekends with their families, to read for hours without work pressure, to turn off their phones whenever they want to decline opportunities that don't feel right. That is the kind of wealth ordinary people rarely understand. Freedom doesn't come from how much money you have, but from how you structure your life. Green realized that financial freedom isn't, "I have $1 million." It's the ratio between the money you need to live and the time you must trade to earn it. If your cost of living is low, you need less income, you get more time, you gain more freedom. If your cost of living is high, you must work more, you drain your time, you get trapped. This is why so many great investors live very simply.
not because they are extreme savers, but because they understand that freedom comes from lightness, not from overcomplication. They optimize their finances the same way they optimize their time. Reduce waste, increase control, create space for deep thinking. Money doesn't create happiness, but it creates the space where happiness can grow. Green describes the feeling of stepping into the homes of some billionaire investors he interviewed. Not extravagant, but quiet. A simple workspace, a relaxed schedule, a day with plenty of white space, time used intentionally. They aren't busy, they clear the path for their minds to work. They understand that happiness isn't something you buy with money, but money can create the conditions that make happiness possible. Time to take care of yourself, time to think, time to be with the people you love, time to stop racing everyone else. If freedom is the destination, then time is the real currency. William Green says, "The poorest person is the one who has plenty of money but doesn't own a single hour of their own life. You can buy a luxury car, a big house, an expensive watch, but you cannot buy back lost time, not even for a second." That's why the wisest investors don't ask, "What's the return?" They ask, "How much time will this cost me? How much mental space? How much freedom?" And that question, more than anything else, is what allowed them to become richer, but more importantly, freer.
Part 8. Becoming a better person through investing. Through years of research and conversations with the world's best investors, William Green discovered something most people overlook. Investing isn't just a journey to generate returns. It's a journey that shapes character. And the most surprising part, the longer you invest, the clearer you see yourself. Investing is a mirror into human nature. When stock prices drop, what you face isn't the market, it's your fear. When opportunities arise, what you need to control isn't your portfolio, it's your greed. When someone else succeeds, what you have to overcome isn't them, it's your own insecurity or envy. The market doesn't care who you are, but the market shows you who you really are. This is why the best investors often understand themselves the most. Patience, the virtue modern life has stolen. The investors Green interviewed all shared one trait. Their patience is almost outdated. Charlie Munger reads for hours every day. Nick Sleep is willing to hold an investment untouched for 10 to 15 years. Monish Pabrai pursues no-brainer bets and then waits. They wait as if time itself is their only ally. In a fast-paced world, deadlines, notifications, ads, emails. Patience isn't just a skill, it's a moral quality. Patience teaches you to respect the process, temper impulsiveness, and see one step further than everyone else. Humility, essential for long-lasting investors. Green said it best, "The arrogant investor wins fast but loses everything." The best investors he met were remarkably humble. They acknowledge they cannot predict the market. They know they can be wrong. They don't brag. They don't try to impress. And that humility allows them to survive long enough to become truly wealthy. But humility does more than help you invest wisely. It makes you a better person, less judgmental, less aggressive, more understanding that everyone has limits. Discipline, the foundation of all real-life success. Investing teaches discipline in a way no self-help book can. You learn to make a plan and stick to it. You learn to resist impulsive spending. You learn to say no to things that don't add long-term value. According to Green, these habits spill over into every part of life, from how you eat to how you work, to how you choose the people you spend time with. Skilled investors often have stable lives, and people with stable lives often invest wisely. Investing teaches gratitude. Wise investors understand they aren't rich because they're smarter. They're lucky. Lucky to be born at the right time. Lucky to have access to information. Lucky to live in a society that creates opportunities. This gratitude allows them to live more lightly, less resentment, less pointless competition, less material show-off. And gratitude helps them make calmer decisions, because a grateful person panics the least. Investing doesn't just make you richer, it makes you deeper. William Green concludes, if you take the right path, Investing transforms you into a better version of yourself. You become calmer when life gets turbulent. You become more ethical when money tempts people to stray. You become wiser, understanding that nothing lasts forever. You know what you need, you know what you want, and you know how to use money to serve those things, rather than letting money lead you. And in the end, you realize, investing is the art of building wealth outside, but more importantly, it's the art of building depth within. Finally, Richer, Wiser, Happier is a book that helps you rise above yourself. It shows that true wealth doesn't come from speed or luck. It comes from becoming a wiser, calmer, and freer version of yourself every single day. If you want to gain deeper insight into how the world's greatest investors think, live, and succeed, not just in the market, but in their own lives, I've included a link in the description below so you can explore the book further. Invest in your own knowledge before you invest in anything else. This book is one of the highest return investments you can start today.